Hi, everyone. Thank you for coming. Thank you for listening to our video. Today, we're going to be talking about a very important topic in the preparation of income taxes, and that is filing status and dependence. Filing status and dependence are very important when we are going to start preparing our income taxes. So let's move on. So filing status, why? Why do we need to know about filing status? Is because it's going to determine eligibility for an amount of the tax deductions, the standard deduction, the tax credits, the tax rates for your clients. Also, the filing status is going to be based on marital status and family situation as of December 31st, 2022. So let's move on. So how many filing status taxpayers can choose from? There's 5. For married couple, we have married filing jointly and we have married filing separate. But remember, in the VITA program, married filing separate is out of scope. And for single people, we have single, head of household, and qualifying surviving spouse. We're going to be speaking about all these a little bit more deeper as we move on. So on the right side of the screen, you will see Form 1040 for 2022. And the first thing that we see on top of the form is filing status. We see single, married filing jointly, married filing separate, head of household, and qualifying surviving spouse. And at the bottom on line 12, we see the standard deduction. Each filing status is going to go to with their standard deduction. But what is a standard deduction? Let me explain to you what is a standard deduction. A standard deduction is a specific dollar amount that will reduce the amount of income on which the taxpayer is going to be taxed. So that's why it is very important to choose the right filing status for your clients, because that is going to determine, as we said before, tax credits, standard deduction, and all those things. Okay, let's move on. Let's talk about married filing joint. These are for couples that are legally married filing one return. They're going to be combining all their income and expenses, even if one spouse has not income. It's going to give the best tax rate and biggest tax credits to the couple, and is also for same-sex marriages. And the standard deduction is going to be $25,900. So remember, married filing jointly is 2 people doing one return, combining income, expenses. Even though one spouse doesn't have any income, they can do it together if they are legally married. And if one of the taxpayers is over the age of 65, we can add $1,400 on top of the standard deduction. And if both of them are over the age of 65, we're going to be adding $2,800. Next, we're going to be talking about married filing separate. Married couples are going to be filing separate tax returns. They are not going to be combining any income or expenses, and both need to have the same filing status. It is very disadvantageous. Why? Because you're going to be losing a lot of the credits, and the standard deduction is going to be only $12,950 for each one of the couples or the people doing the tax return this way. But remember, filing status is filing married separate. Filing status is out of scope for the VITA program in California. Other states, yes, maybe they have it, but in California, we don't do it. For single people, you have to be single, never married, or legally divorced by December 31st, 2022. No dependents, or have dependents that is not related to you or does not live with you. The standard deduction for this type of taxpayer is going to be $12,950. And if the taxpayer is over the age of 65, we're going to be adding $1,750. Filing status. The filing status for head of household is designed for certain single taxpayers with a qualified dependent. The taxpayer, we need to have we need to have 3 requirements. It has to be a single taxpayer. It needs to have a qualified dependent person, and it needs to pay for more than half of the expenses of the home they lived in with the dependents. It is the most complex one. Why? Because we need to make sure that all 3 requirements are met. The standard deduction for head of household is $19,400. And if the taxpayer is over the age of 65, we're going to be adding $1,750 on top of the regular standard deduction. So let's review. Who can qualify as a head of household? A single taxpayer. It could be married, but they have to live away from the spouse in the last 6 months of 2022. It needs to have a qualified dependent person. It has to be relative living in the home for at least 6 months, or parents outside of home. And it needs to pay to keep at a home lived in with the dependent. So they need to pay more than half of the expenses of that home. So all these 3 requirements need to be met in order for that taxpayer qualified as a head of household. Next, qualifying surviving spouse. It is very rare, but maybe you're going to encounter 1 or 2. It has a better status than head of household because it has a higher standard deduction, $25,900. If the spouse passed away in 2022, the taxpayer can still file as a married filing joint. If the spouse died in 2020 or 2021 and the taxpayer did not remarry before the end of 22, it still can qualify as a surviving spouse. So remember, for filing status as a qualifying surviving spouse, you need to be a single taxpayer. You need to have a dependent child. You need to pay more than half of the expenses of the home you live with your dependent. And you need to be widowed in 2020 or 2021. So we need to have all these 4 requirements in order for that taxpayer to qualify as a surviving spouse. Dependents. Who are dependents? If someone claims a dependent, others cannot claim that dependent again. It's not like you are going to claim your niece and your sister are going to claim the daughter. No, it's only one person who can claim that dependent. Why? Because it will cause long delay on tax refund and it will trigger an investigation. Next, dependents. Who are dependents? Dependents are people that are supported by the taxpayers. And we have 2 types of dependents. We have qualified dependent child and we have qualifying dependent relative. If you would like to know more about this, you can see it on publication 4012 on tab C. So we're going to be talking a little bit more about the qualifying dependent child. We need to go through 4 different tests in order to know that that child is going to qualify as a dependent child. First test, relationship test. It has to be your child, grandchild, sibling or step sibling, and any other descendants. Also, we need to look into the age test. It has to be younger than tax filer. It needs to be under 19 or under 24 and a full-time student. Or totally or permanently disabled of any age. The support test. Child cannot provide more than 50% of their own support. The taxpayer is the one who's going to be supporting that child. And they need to live with the taxpayer for more than 6 months, at least 6 months. But there are some exceptions to this rule. Example, temporary absences, like if they're going to school, maybe they're going to school in a different country, or they're going to school in a different state or in a different city, or if they have a medical situation and they are in the hospital, or any other situations. Or if the child is born, die, or went missing, it is like they have lived the entire 2022. The dependent child has not income limit. So we need to take into consideration all these tests in order to know who can qualify as a dependent child. Next, here we have a screenshot of how it looks like on the TaxSlayer software. So we're gonna be typing the first name, last name, date of birth, social security, relationship, the number of months this person lived with the taxpayer. All these things we're gonna be typing it on TaxSlayer. And this is how it's gonna look like. So let's see who qualifies as a dependent child. Let's read. May 2022, your boyfriend moved out and you take on full financial responsibility for your 14-year-old son. Your child did not pay for more than half of his expenses. Can this boy qualify as a dependent child on the taxpayer tax return? Yes. Why? Because you are taking responsibility of your own son. He did not pay for more than half of the expenses. We see that maybe he doesn't have any income. He has been living with you for more than 6 months. And you're taking full on responsibility. So in this case, yeah, he can qualify as a dependent child. Next, Michael and his wife have a 21-year-old daughter at NYU. She's a full-time. They support her entirely and she cannot be claimed by anyone else. Can Michael and his wife claim her daughter as a dependent child? So let's go over the test. She's under 24 and a full-time student. They pay for her entirely. She cannot be claimed by anyone else. It doesn't look like she has any income. So in this case, yes, they can claim their daughter as a dependent child. Your 16-year-old nephew moved in with you in June 2022 from Mexico, and you support him entirely. He's not a U.S. citizen. Yeah, he's related to you. He's your nephew. He has been living with you more than 6 months. You support him entirely. In this case, yes, you can reclaim him as a dependent child, but we need to apply for IT number. If he doesn't have a social security number, we need to apply for an IT number in order for the taxpayer to claim this child as a dependent child. Mark is in high school. He made $5,500 as a waiter. Mark did not pay more than half of his expenses and used the money to buy a car. Can his parents claim him? Yes. Why? Okay. Mark did not pay more than half of his expenses. He's still in high school. Yeah, he made more than $5,500. But when the qualifying child remembered that there is no income limit, as long as the parents support him more than half of 50% of the expenses. And in this case, yeah, his parents can claim him on their income tax return. Okay, let's talk about situations that sometimes arise when we are doing taxes. When more than one tax filer can claim the qualifying dependent child, what happened next? Okay, let's see some tiebreaker rules. If one of the tax filer is the parent, they can claim the dependent. For example, if a grandmother and a parent are claiming that they can claim that child as a dependent child, who has more priority? In this case, it will be the parent. If both parents are, the parent with the higher adjusted gross income is entitled to claim that dependent. But also, the parent can forfeit the right to the dependent and all the tax benefits and let the other tax filer with a lower adjusted gross income claim that dependent. So many things could happen when people want to claim a dependence. When clients, they don't know what to do, you can show them publication 4012, or maybe they can speak to a lawyer, or maybe they can do other things. But also it could happen when we encounter divorced parents. They can use IRS form 8332 to override any tax law. Like non-custodial parent can claim the child as a dependent or any other configuration. Okay, now let's see when a dependent should file a tax return. The dependent should file a tax return to get their withholding back. Sometimes, kids or young people, they get a summer job or they have a part-time job. Yes, they can do their income taxes at the end of the year, but only they're gonna get back the withholdings. They're not gonna get any credit or anything extra. Only they're gonna receive their withholdings back. The taxpayer supporting the qualifying dependent will claim all the credits they qualify for. For example, education credits. They are still supported by another taxpayer for more than 50%. Like I said before, college students living at home or low-income elderly or adults are people who can file their tax return to get their withholdings back. Now let's talk about the other dependence types, the qualifying relative dependence. Same thing, they cannot be claimed by anyone else. We need to go through the requirements. For example, income limits. For the qualifying child, there's no income limit. For the qualifying relative, there is income limit. The dependent's taxable gross income should be less than $4,400. Support test. Taxpayer, as the same as the qualifying child, must provide more than 50% of their support. Residency. Dependent does not have to live with taxpayers. Can even live in Mexico or Canada only if they are related. For non-relative, they must live with the taxpayer for 12 months, for the whole 12 months of 2022. And they could be of any age. Before we move on, let me speak a little bit about what is gross income. Gross income is all income in the form of money, property, and services that is not exempt from tax. Non-taxable income is not included in the $4,400 threshold. What are non-taxable income? Non-taxable income, it is welfare, CalFresh, CalWorks, non-taxable Social Security or supplemental security income, gifts, or certain insurance proceeds. But non-taxable income should be accounted for when we are determining if the taxpayer is providing more than 50% of the dependent's relative support. So one of the things is for the dependent, and the non-taxable income is not included when we are talking about the dependent relative. Let's see, Deborah paid for all her mother's living expenses, totaling $12,400. for 2022. Her mother received $6,800 in Social Security benefits. The amount is so low, it is not taxable, and her taxable income is zero. So can Deborah claim her mother on Deborah's tax return? Yes. Why? Because let's go over the requirements. She's paid more than half of their support. Her mother did not make any money because her taxable income is zero, because her Social Security was very low. So in this case, Deborah could claim her mother on her tax return. Manny sends $550 a month to pay for food and rent for his children in Jalisco, Mexico. This is more than half of their support and no one else can claim them. Can Manny claim their kids on his tax return? Yes. Why? Because he's paying more than half of their support. Yes, they're living in Mexico, but remember, they could live in Mexico or they could live in Canada and they still could claim them. And he's paying more than half of their support and no one else can claim them. Dina's boyfriend, Tim, moved in December 2021 after losing his business. Since then, Dina has paid for more than half of his expenses and Tim made $39.50 income in 2022. Can Dina claim Tim on his tax return? Yes. Why? Because Tim has been living with Dina for the whole 2022. He's making less than $4,400 and she's paying more than half of his expenses. So in this case, yes, she can claim him on her tax return. Okay, let's see here. Who qualifies as dependent child or qualifying relative or neither? Dina and Sam support their 23-year-old son, Charles. Charles is a full-time student at UCSD. Charles earned $5,000 and his parents pay his rent, utilities all year. Can Dina and Sam can claim their son as a dependent child or a qualifying relative? In this case, Dina and Sam can claim their son as a qualifying dependent child. Why? Because he's under 24. He's a full-time student. They pay for more than half of his more than half of the 50% of his expenses. Yes, Charles made $5,000, but as a dependent child, there is not income limit. Emily is a single mother and lives with her adult son, Howard. He is permanently disabled and pays for his own expenses with California disability income. Can Emily claim Howard on her tax return? So let's see. In this case, Emily cannot claim Howard. Why? Because, yeah, he has a disability. He is living with her, but Howard is paying for more. He's paying for all his own expenses. So in this case, Emily cannot claim Howard on her tax return. Okay, now let's review. Tax filers with dependents. Qualifying dependent child. Let's review. Cannot be a dependent child of another taxpayer. Cannot be claimed by anyone else. He needs to be under 19 or under 24 if a full-time student for at least 5 months. Taxpayer must be related dependent. Child must live with taxpayer for at least 6 months. Do not provide more than half of their own support, and there is no income limit. So those are the things that we always need to remember when we think about a qualifying dependent child. Having a dependent does not automatically change filing status from single into head of household. So let's review head of household. Remember, it is designed for certain single taxpayers with dependents. Let's review the requirements. They need to be a single taxpayer, or it could be married, but they need to live away from the spouse for the last 6 months of 2022. They need to have a qualified dependent person. It should be a relative in home at least 6 months, or parents outside of home, and the taxpayer must pay for more than half of the expenses of the home they lived in. So remember, we need to have all these 3 requirements in order for a taxpayer qualified as a head of household. Single taxpayer, qualified dependent person, plus paying more than half of the expenses of the home. Single with dependents. Unmarried couple, Bill and Meg. They live together. Meg support James, pay more than half of his expenses. Next, Meg also pay for more than half of the support of Bill's baby daughter, Regina. Meg and Regina are not related. In this case, Meg cannot qualify as a head of household. Why? Because they are not related. They are not, they're living together. She has paid for more than half of the expenses of their support, but they are unmarried couples. Or they are an unmarried couple. Okay, second example, William has children living with his aunt in Mexico. He sends money to his mother and fully supports his children. He can claim them as dependents, but they will not change his status to head of household. Why? Because they need to live with him, with William in this case, for at least 6 months. So they can be claimed as a dependent, but he is not going to change the filing status from single to head of household. So these tax filers are single and can claim them as a qualified dependent relative, but it's not going to change the status, the filing status from single to head of household. So we need to have all these into consideration. They are not related, they're living away. So all the things we need to pay attention when we are asking our clients which type of filing status we're going to choose from: head of household, single, qualifying surviving spouse, or filing jointly. So we always need to take into consideration all the requirements for each one of them. Okay, so we're done. If you have any questions, just review again. If you have any questions, just review again the video. And if anything else, just contact us. Thank you. Bye-bye.